Be Wealthy and Smart, episode 1119.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we are going to talk about how silver demand is on pace for a record year. This comes to us from Schiff Gold. This article is right on point with what's been going on with silver this year, and if things continue as they are, it will hit a new record in terms of demand. So let me share this article with you that goes into a lot of great details. Silver demand is on pace to hit record levels in 2022, driven by new highs for physical investment, industrial demand, jewelry, and silverware production, according to the Silver Institute's interim silver market review. Global silver demand is projected to reach a new high of 1.21 billion ounces in 2022. That would be a 16% increase from 2021. Institutional demand for silver has faced headwinds due to rising interest rates with Federal Reserve's inflation fight. This has led to a decrease in silver ETF holdings, but demand for physical silver has been robust. Physical investment demand is on pace to jump by 18% to 329 million ounces this year. According to the Silver Institute, support has come from investor fears of high inflation, the Russia-Ukraine war, recessionary concerns, mistrust in government, and buying on price dips. The rise was boosted further by a near doubling of Indian demand, a recovery from a slump last year, with investors often taking advantage of lower rupee prices. So investors in India have really picked up their buying of silver. We've seen signs of this high demand in the rapidly decreasing levels of silver in COMEX's vaults. Industrial demand makes up more than 60% of silver usage each year. It is on track to set a new record of 539 million ounces in 2022. The push for green energy has helped drive industrial demand higher, with more and more silver being used to produce solar panels. The electrification of vehicles is also boosting demand, along with the adoption of 5G technologies. According to the Silver Institute, demand in these emerging markets has helped silver overcome macroeconomic headwinds as the global economy has slowed. Demand for silver jewelry and silverware is projected to surge by 29% and 72% respectively. Jewelry production will use about 235 million ounces, and silverware fabrication will consume another 73 million ounces this year. What the Silver Institute describes as an unprecedented rebound in Indian demand is driving demand in these categories higher. This has partly been driven by strong inventory replenishment ahead of the festive and wedding season, following heavy stock depletion in 2021. Silver mine output will only chart a small 1% increase in 2022. As a result, the global silver market is forecast to record a second consecutive deficit in 2022. The 194 million ounce shortfall will represent a multi-decade high and will likely come in at 4 times the level seen in 2021. With silver prices still relatively low, this is a great time to add silver to your investment portfolio. According to research by Oxford Economics, investors would benefit from an average of 4 to 6% silver allocation within a diversified portfolio. This is far below the average investor's exposure to silver. There are signs that silver is significantly undervalued. The silver-gold ratio is currently 83 to 1. That means it takes over 83 ounces of silver to buy 1 ounce of gold. To put that into perspective, the average in the modern era has been between 40 to 1 and 50 to 1. Historically, the ratio has always returned to that mean, and when it does so with a vengeance. The ratio fell to 30 to 1 in 2011 and below 20 to 1 in 1979. Historically, when the spread gets this wide, silver doesn't just outperform gold, it goes on a massive run in a short period of time. Since January 2000, this has happened 4 times. As this chart shows, the snapback is swift and strong. And as the Silver Institute projections show, the supply and demand dynamics also look good for silver, even with a looming recession. The fundamental backdrop has never been stronger. The underlying data indicates that the snapback will come soon and potentially play out very quickly. This is a great opportunity to add the diversifying power of silver to your portfolio. End of article. Yeah, the ratio of gold to silver is a huge indicator. And when it gets out of whack like that, and it takes so much more silver just to equal 1 ounce of gold, that equilibrium will get back into the more historic numbers of between 40 to 1 and 50 to 1. So I'll include a link to this article in the show notes so you can look up the referenced chart. But basically the chart is showing that silver has had big run-ups when the gold-silver ratio is out of whack, like it is currently. Some of the moves that have happened on this chart include a 75% increase, an 82% increase in 12 months, a 36% increase in 4 months, and a 91% increase in 5 months that happened back in 2018. So silver is still a great buy and is looking extremely bullish. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.